Hello everyone, I'm John with JP Strategic Investments, and today I'm going to walk you through a detailed explanation of Rocket Company's corporate structure and their different share classes. I've gotten several requests for this over the past week or so I'm going to do my best to explain what all the different share classes mean and why Dan Gilbert and management decided to structure the company in this way. As always, if you find videos like this helpful, don't forget to like and subscribe, and with that out of the way, let's dive right in. So first of all, in case you're wondering where I'm getting all of this information and the diagrams that I'm about to go over, it all comes directly from Rocket's S-1 filing, which is the detailed document that companies have to file with the SEC before they go public. In this case specifically, it's the S-1A, which is the final amended version of the filing. You can find it on Rocket's Investor Relations page under SEC Filings, which I'll also link in the description below. So if we take a look at the company's organizational structure, we can see that the S1 shows a diagram and explanation of the company's corporate structure prior to the IPO. We can see here that Rock Holdings Incorporated, or RHI, owned 100% of Quicken Loans and all other subsidiaries. And there's an important note here at the top that says Dan Gilbert is the principal shareholder of RHI. So this is a fairly simple organizational structure, and it's fairly common. You have a parent company, in this case RHI, and subsidiaries of that parent company. Well, as we move down the filing, we can see that there are several changes that are going to be made prior to the IPO. The first thing they did was create Rocket Companies, which is the public company, as a subsidiary of RHI. And they also created a separate holdings company as another subsidiary of RHI. So now we have a parent company and 4 separate subsidiaries. Then what they did was shuffle Quicken Loans along with most of the other subsidiaries under the new holdings company so that there's sort of a 3-tier structure with RHI in control of holdings, which is in control of Quicken Loans and the other subsidiaries. And then Rocket Companies is controlled separately by RHI. So then what they did was make Rocket Companies the sole managing member of RKT Holdings, which essentially means that Rocket Companies is in control of all of the day-to-day operations of Rocket Holdings, and in turn in control of Quicken Loans and the rest of the subsidiaries. Now, it's important to note here that while they are in control of the day-to-day operations, Rocket Companies currently has no ownership stake in Rocket Holdings or any of the other subsidiaries. But the restructuring isn't quite done yet. The next thing they did was divide up Rocket Holdings into shares which they called holding units. Most of these holding units went to RHI and the rest went to Dan Gilbert directly, which brings us to something like this. Then what they did was kind of squeeze Rocket Companies in the middle here and also divide it between RHI and Dan Gilbert. And this is where we start to get the different classes of shares. So during the process of the reorganization, there were 4 separate classes of shares, but Class B and C shares were only made to facilitate the reorganization. And the S1 states that there will be no remaining Class B or C shares once the IPO is complete. So we really only have to worry about the Class A and D shares. Now the main difference between the Class A and D shares are the voting rights and the economic rights. Class A shares do have economic rights, meaning they represent a financial ownership in the company and they are eligible for dividends, but they only give the owner 1 vote per share. Class D shares, on the other hand, have no economic rights, but they give the owner 10 votes per share. So then what happened is the Class D shares were divided between RHI and Dan Gilbert in the same percent that the holding units were. Now, keep in mind at this point that Rocket Companies is still nothing but an empty corporation. Again, while it is the sole managing member of RKT Holdings, it doesn't actually have any ownership stake in RKT Holdings, which is where all of the earnings come from. And this is where the public offering of the Class A shares comes in. Now, normally when a company IPOs, they plan to use the proceeds to help the company grow in some way, whether it be increasing inventory, building new locations, or a variety of other things. In this case, though, the sole purpose of Rocket Companies selling its Class A shares to the public was to use the money to purchase an 8% stake in RKT Holdings, which would then give them ownership in Quicken Loans and the rest of the subsidiaries. And while this may seem a little odd, it's actually very similar to a SPAC, or Special Purpose Acquisition Company, which has become a popular option for companies looking to go public in recent years. Essentially what Dan Gilbert and RHI did was just create their own SPAC with Rocket Companies. And so finally, after all of this restructuring, we get to a diagram that many of you have probably seen from Rocket's S1 that looks like this. The only difference here is that there were a couple of smaller subsidiaries that remained under the sole control of RHI, which I didn't include in my own diagram so that we could just focus on the restructuring of the business. Now there are a couple of important things to note here before we get into why they structured the business this way. First, it's important to note that the Class D shares are fully convertible to Class A shares, but only if they are exchanged with the same amount of holdings units. They make it clear in the S1 that the Class D shares correspond to the holding units, because what they've essentially done is separate the economic interest and the voting interest through the creation of holding units and Class D shares. This means that to convert the Class D shares to Class A shares, RHI and Dan Gilbert have to combine the two. This way, when they do so, they give up both economic rights and voting rights. They can't just give up one or the other. The second thing that is very important in understanding the way the company is structured and also the way the company reports earnings is also laid out in the S1. It says that, quote, because we will manage and operate the business and control the strategic decisions and day-to-day operations of holdings, and we will also have a substantial financial interest in holdings, we will consolidate the financial results of holdings. And a portion of our net income or loss will be allocated to non-controlling interest to reflect the entitlement of RHI and Dan Gilbert to a portion of Holdings' net income or loss. So basically what they're saying here is that because Rocket Companies is essentially in control of most of what Rocket Holdings does, and also because it has an ownership stake, and on top of that, because the Class D shares owned by RHI and Dan Gilbert are fully convertible, it just makes more sense to report the entire earnings of Rocket Holdings and then designate what percent of the earnings is controlled by Rocket Companies and what is controlled by Dan Gilbert and RHI. This is why if you look at the earnings, you'll see a large percentage designated to non-controlling interest. And it's also why if you take the 115 or so million shares outstanding and multiply it by the current share price, you don't get the company's market cap. You actually get somewhere around 2.3 billion of the total 40 billion or so market cap. Now, before you go and say that this means that the PE ratio is inflated, remember that the percentage of the earnings controlled by Rocket Companies is also the same percentage that they control of the market cap, so the PE ratio would be exactly the same. So hopefully now you have a better understanding of this diagram and the organizational structure of the business. So let's get into why they actually set it up this way. Well, it's likely one of two reasons. Either eventually you do want to sell more, but you want to control to whom that larger chunk is sold, which by the way is where the Buffett rumors come in, or the other possible reason is that you eventually want to sell more but at a higher valuation. Or it could be a combination of the two. Either way, the idea is to maintain control and ownership of the company because you're confident that the valuation will be higher in the future. The best evidence to back this theory up is the buyback program that was announced in last quarter's earnings report. Many of you probably know that they announced a share buyback program of up to $1 billion that will be in effect for the next 2 years. Well, if you remember earlier about the math we did on the market cap, the current shares outstanding only add up to about $2.3 billion. Rocket obviously isn't going to buy back almost half of their current shares outstanding, so this means that they expect there to be more shares outstanding in the next 2 years. Now, the argument could be made that this was just a hedge against possible insider selling upon the expiration of the lockup period. But I think based on the size of the buyback program, it's more likely that this is because Dan Gilbert has planned to sell off a larger chunk of his position all along, and he's thinking that there will be a higher valuation sometime in the next 2 years or so. So basically my analysis of this organizational structure is that Dan Gilbert and management are confident in the company's future, but they want the advantages of being a public company. Because of this, they created a very complicated organizational structure to take a small part of the company public, while at the same time ensuring control of the remaining portion with the intention of selling more later or taking on strategic partners at a higher valuation. I hope you found this analysis helpful, and if you did, please consider liking and subscribing. Also, be sure to leave me any questions in the comments below, and I'll do my best to get them all answered. Other than that, see you next time, and have a great day.